please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Welcome back. Well, as we've been telling you, there has been a bit of a dip in the equity markets. Maybe we are just being greedy. It went all the way up to 0.6, the Sensex and the Nifty, now up 0.35. Likewise, the mid-caps also showing about a 30 basis point dip, but all of them still in the green. What hasn't shown a dip actually, or at least not shown that much of a dip, are the bond markets. I mean, I think the 10-year bond started off at about 98.70 or thereabouts. At the moment, 98.50. Let me put it in yield terms. We had a low of 7.35, now 7.38. So very little being given away by the bond market. Still a strong rally out there because of the government borrowing program. But what does all this mean hereafter? For this week, for this month, for the year ahead? B Prasanna, Head Global Markets Group at ICICI Bank, joins us now. Good morning, Prasanna. What's the next step with this rally? 7.3538 holds, and we are going to see bond yields falling further in April?
So, Lata, good morning to you and your viewers. So yes, yesterday what happened was like the release of a blockbuster movie directed by the Finance Ministry. It was an amazing set of measures that they had announced, more or less listening to most of the demands that the industry had asked them for. So some of the things that you had well covered in your earlier reports had led to this kind of a rally. So the interesting thing is that, see, a little bit of background to the whole thing is that yields had gone up by nearly 100 basis points over the last, I would say, 5 to 6 months, equally split between fundamental factors and technical factors. Fundamental factors were the global yields and the oil, domestic inflation going up, current account deficit going up. In broad, the deteriorating macros, slightly deteriorating macros of the Indian economy, and as well as the global macro factors. The technical factors were factors like the need for the banking system to take care of bond buying in a rising interest rate scenario, and hence the need for them to manage the duration of their investments. So this was broadly the reasons why yields had gone up. So what has happened yesterday is at least a correction of most of the technical factors, which is to say that now the government is far more going to be proactive in issuing short maturity bonds, less than 5 years. They're going to be proactive in issuing floating rate bonds. And not only that, they have actually postponed some of the borrowing from the first half to the second half by announcing a far lesser borrowing for the first half. And also they have actually now relying less on, they are relying more on small savings collections to fund the borrowing program. So all this has led to the demand supply situation being restored in a much better fashion. But going ahead, I mean, so this is the impact that we have seen already, right? So maybe it goes down to 7/4 at best, and maybe even a few basis points below that. But going forward, see, in markets, everything else doesn't remain constant. We'll have to keep tracking a whole lot of fundamental factors as well. So what could now become important is the stance of the Reserve Bank of India. The policy is just in the first week of April. What's going to happen to global bond yields? The US 10-year is hovering between 280 and 295. It's not going beyond 295, yes, but it's not going down either. The Fed rate hikes, there have been 3 rate hikes which has been factored in this year, including the one which happened. And the next year, they've already indicated actually one more hike and one more hike later in 2020. So all this means that it's not, I mean, once the correction of yields, the technical correction of yields has happened, it's back to normal business, hopefully. And we'll have to see banks getting back into the auctions next year, and we'll have to follow fundamental factors very closely to figure out where it goes from here.
So, Prasanna, a two-part question for you. One, how much do you think the yields could move further over the next, say, 3 to 4 days? And two, for ICICI Bank's bond portfolio, how much do you think the losses could reduce?
Regarding the how much it can potentially move going forward, so I think 720-25 levels is something that is surely possible. It of course depends upon a whole lot of other things. There'll obviously be a lot of profit booking pressures which come in, and from that perspective we'll have to really match where the demand and supply goes from here. The good part is the government borrows a week later, so till that time at least the surge supply in the primary market is not needed to be taken care of. Even the secondary market selling from the public sector banks, which was coming in earlier in the last 1 or 2 months, my suspicion is that it will also come down because of the favorable technical factors that have now come out.
Okay. So you think come April 1st, PSU banks will buy?
No, that's something that you might have to ask them, or maybe something that only time will tell whether they are buying or not. But at least what is very clear is that the supply, which was there in the 10 to 14 year segment, which is somewhere in the region of 50% of the total borrowing program, is now down to something like 29% of the borrowing program. And that was a segment which required a lot of public sector bank participation, or rather bank participation. Now what they have smartly done is to do a barbell strategy of the borrowing program. They're doing more in the 2 to 5 year segment, which was not there, and that will have end investors like ALMs and even the foreign banking communities, ALMs and all that.
Sure.
And they have also increased more in the 15 to 19 and the greater than 20 year bucket, where you have the passive investors like pension funds and insurance companies and so on and so forth. So they have smartly reduced the risk supply which comes into the trading end of the market. Hence, even if banks were not to participate to that extent, it is really possible for the borrowing program, at least the initial 1, 2, 3 auctions, to go through smoothly, considering that they also have at their disposal floating rate bond issuances as well.
Is there a chance banks will cut deposit rates?
No, Lata. Actually, due to year-end pressures, whatever was a rise, that level of unwinding can potentially happen in the beginning of next year. But even that, I would assume, is not going to happen on the retail deposit level, because that is pretty much been stable. It's more the wholesale deposit rates which went up to take into account the tightness in the domestic money market period. And hence, from that, the interbank rates and the institutional deposit rates might come down a little in the first week of April.
So MCLRs may remain flat. Will they fall or will they rise in the next 6 months?
So MCLR is something that, I mean, obviously ALCO will have to sit and decide about how it goes. But broadly, from a system perspective, I would tend to think that they would remain flattish. Because if you've seen in the last 1 or 2 months, even when G-Sec yields, 4 or 5 months, even when G-Sec yields went up so much, it is not that the MCLR went up anywhere close to that level. So it is more of a function of deposit rate. So I think we'll have to look at how deposit rates moves in the system, and then accordingly how the MCLRs move, which I think I would suspect that it will be more or less flat.
Yeah, final question. Would you worry about the second half? I mean, can yields go back to 7.7?
So that's too long period, Lata. We all live in the short term. Short term is the next week and the week after that. So I would say that's the other smart thing that they've done, is to postpone most of the problems to the second half.
Exactly.
So we will see, maybe at that time there will be other flows which will come in.
And to next year as well. You're going to have a lot of short-term paper issued and no buyback.
They've reduced the buybacks.
So you worry about next year?
Yeah, so they've reduced the buyback, so that postpones it to the second half. They have reduced the borrowing in the first half, so that goes the postponement to the second half. So we live and fight that battle when we come across that time. So I don't think we need to bother about too much of it, because there is anyway a confluence of factors at that time, right? I mean, you're going to have the MSPs kicking in at that time as well. You need to see where global yields are moved at that time, where Fed is indicating, so on and so forth. So a lot of water to flow under the bridge till the time we reach the second half. We'll worry for the first half as of now.
All right, Prasanna, thank you very much. Well, I just wanted to point out, Prasanna's first analogy was a blockbuster movie, and he's the son of a very big movie maker, S. Balachandran from the South, a legend from the South.
Okay, just a point here. Canfin Homes is saying that they did not even have a board meet to, discuss that stake sale yesterday. So they, of course, are making that denial right now. So the stock is at the low point of the day. Of course, the deal we assume would happen at some point, but going by what they are saying, they did not meet to discuss, and the names that were mentioned, they're saying that they haven't had discussion with them. Well, and metal stocks really are leading the market today. Some of that, of course, is global in nature. Manisha is here with a quick roundup of how the commodity market is doing. Manisha, good morning.
Morning, Anuj, and thank you so much for that. We'll come to metals, but let us please start with the crude oil prices because it's a third straight day that you have seen the prices holding around that $70 per barrel mark. We are just a percentage away from 2018 highs, and once that crosses, you will be staring at a 3-year highs for the crude oil prices there. So holding firm, nearly 0.25% up coming in for the Indian markets as well here. And it's not just crude. If you look at the natural gas prices, most of the distillates, gasoline, all of that in the global markets also is trading on a firmer note. The speculative long positions also seem to be building up. So everywhere that you see, whether it is the geopolitics, the weakness in US dollar, the speculative money moving in is clearly supportive of commodity prices, and crude clearly taking care of that. The gold and silver prices also have seen some support continue for that. The international prices actually have seen a range between 1306 to 1360 on the higher side for this year now, and we are trading at 1357. So clearly on the higher side of the range. If 1360 takes off, then 1380 is the next level that the markets are watching out for. The interesting point, of course, is for the Indian markets, where you are looking at a discount of nearly $7 as the prices have moved higher. You have seen lower buying coming in, and the Indian prices for that reason are trading slightly on the weaker side there. The base metal prices definitely have seen some buying come in. It all started from the US session yesterday. Asia has seen some more follow-through buying coming in. And even as we have seen opportunity buying on the lower side because of the kind of corrections that we saw in the past couple of weeks, it also has seen some fundamental support. You have the steel prices trading nearly 2% on the higher side, and that clearly has been supportive for nickel and zinc. The copper prices, because of the inventory decline that we have seen coming on Shanghai warehouses, also have given some support. So 1% gains is what we are seeing in sense of copper as well. Apart from that, it also has to do with China coming out with their smog concerns and overcapacity cuts. That is something that would continue in the next quarter as well, is the statement coming in from China, and that in turn has been supportive as well.
All right.
So it's all buying calls really from Grow Value, whether you start to look at the crude prices or metals there. In case of zinc, they're looking at upside targets of 218. They have a buy in crude as well, where they expect the prices to close above 4,300. And they also have a buy in case of copper, where they expect the prices to gain up by nearly a couple of percentage points more from where they're trading right now.
All right, Manisha, thanks a lot for that. ICICI Bank, by the way, is now making highs of the morning, and that's really propelling the bank nifty right now. Just pull out the intraday chart of ICICI, because that's the one which is now leading. It has, of course, quite a bit of weight in the index, second largest weight in the bank nifty. So that one is doing well. What else is doing well? Well, Apollo Tyres has made the high of the day. That's interesting. Couple of stocks making lows of the day as well. Balrampur Chini, which now is in a bear market. Sugar clearly is in a bear market globally, and that one, by the way, is now making lows of the day. And the Bharti twins are also making the lows of the day. Canara Bank and Can Fin Homes also right now at the low point of the day.
Okay, well, some more stocks are looking good. Biocon, right? That was flagged off by Ashwini actually a while back. Biocon is now up almost 5.5%, and big trades are seen there on the volume front. And some of the oil marketing companies are getting back on the buyers list. So IOC is one stock that's looking good. Apart from that, in general, it's not a bad start to trade. So up almost about 50 odd points for the Nifty now, holding on to the 10,170 mark.
Yes, and between yesterday and today, of course, we've seen quite a bit of gain, but will be interesting to see. Once again today, you know, Sonia, what's happened is that the banks are doing well. So there's quite a bit of, that's where the shorts are. So that's what's seeing short covering. Between yesterday and today, in fact, the Nifty bank has outperformed Nifty by quite a margin. Yesterday also there was 600-point rally. Nifty is nowhere near the high point of the day. The bank Nifty is. So I think that if you see the intraday chart of the Nifty, on the Nifty there are some stocks where there is some bit of selling pressure, which is coming back, but like, you know, as I said, Bharti Twins, HDFC is going a bit lower, ITC is slightly lower, Infosys for last 2 days has been a bit lower, so that's having a bit of an impact, but no such problem for now for the bank Nifty.
Okay, well, before we wind down the show, let's also get you another big cue. The SEBI board will be meeting in Mumbai tomorrow. What's on the agenda? Yash Jain joins us to tell us more. Yash, over to you.
Well, last SEBI board meeting before the financial year ends, and the market regulator is all set to discuss some of the very crucial issues at the end of the year, with essentially initiating those conversations. The most important point on the agenda would be the discussions and the amendments on the insolvency and bankruptcy side. Here we are given to understand that SEBI is likely to discuss discuss a proposal to bring a trading ban on companies which go under IBC. Of course, this has been a popular demand from various players from the industry, and now seems like market regulator SEBI is also paying attention to this particular aspect. Also, what we're given to understand that SEBI will discuss the proposal of relaxing the minimum public shareholding norm of 25% as far as these companies under IBC are concerned, and also letting the incoming promoters infuse more than 75% equity into these companies to essentially ensure a more sustainable and a more effective turnaround of these sick companies. Also, as far as delisting of these companies are concerned, we are given to understand that SEBI could also consider some relaxation as far as the reverse book building procedure of the delisting procedure is concerned. Coming to the second important point, which is discussions on regulations around the violation or non-compliance of the listing norms. We are given to understand that market regulator SEBI is all set to give more powers to exchanges in order to freeze the promoter or the promoter group stake in companies which do not comply with the listing norms, which essentially ranges from corporate governance to board composition and so on and so forth. Also, what we are given to understand that exchanges might also get the power to really initiate the delisting procedure for companies which do not comply with these procedures. The next one is essentially with the whole buyback procedure which we have currently. Essentially here, market regulator SEBI is looking to fix a particular timeline, a time interval between two successive buybacks from the same company, and also putting a cap as far as the maximum quantity, which is to 25%, which can be offloaded through any buyback from any company. Also, apart from these three important points, we are given to understand that the algo trading could be made more excessive, more accessible and more cheaper for retail investors to get a parity between larger brokerages, larger asset management companies and retail investors.